What you know about chilling in the back of the bug? What you know about rolling in the back of the bug? We pull up with pools in the back of the bug. Them honeys getting old lady in the back of the bug. In the back of the bug, in the back of the bug, man. Just imagine in the back in the bug.
Yo, what's good, guys? It's your boy Gus, back in the mix with another video, trying to teach your people how to make the bag. Anyways, today's video, if not this video, will be focusing on something a little bit different, if not also a different market. The market I'll be focusing on is based in Deriv. If you guys aren't familiar with Deriv, Deriv is basically a platform, if not a broker, that basically markets synthetic indices. Synthetic indices aren't connected to actual economy. They drive off of simulation and emulations of the market. So yeah, let me just hop on right into it. I'd say there's nothing really different because the same volatility provided in New York Open and London Open Asian session is still apparent, and it pretty much just works the same. But to start off the video, I'd say I still use the same trading time slots, this being 7 a.m. And then from 7 a.m. for my New York Open, what I would initially do is just outline the high and the low. So after outlining that high and that low there, I'd initially go onto a lower time frame just to analyze how price was moving. If not, to be more specific, just identify my accumulation, manipulation, and distribution phase. And as you can see, price initially just drove up there, and by New York Open, price just started surging towards previous highs, if I'm guessing right. But before we get there, initially AMD process that we're looking at is even finishing at around 8 o'clock over there. So from 8, that's where we'd start to monitor price, and on a lower time frame we'd be looking for entries. And as according to my entry module, I'd say if price goes above and taps on top, I would initially trade from that level. If not, I'd also wait for other confirmations as according to my strategy. But from 8 o'clock we can see price drove up. From 8 we can see price drove up, tested the level twice, if not 3 times, and then on the third time, that's when price initially continued with the distribution phase. What's going on, Chief? So initially from there we can see 7 a.m.'s high was tested 3 times before price initially drove up, and that is the respect I would be looking for in terms of the CRT candle range theory being used as a strategy and being used as a confluence within my strategies. But from there, what I would initially do is, after seeing that price is respected, I'd say even by the second tap, I'd be just looking for confirmations using imbalances. So from there, I would have monitored that FEG there, and then initially just waited for price to respect that order block there. So as long as price went above the order block, I would have taken that as an entry. If not already over there, that was my entry as price came in and respected that during the third tap. And from there, initially I would have traded going for 2R, let's see. So if I had to put my stop loss on those lows, and initially just targeted 1:2, that was clearly caught there. If you're just targeting 1:2, But if you're using market structure, I would have also technically just targeted previous highs. And in order to find out the previous highs that I would have been targeting, I would have used the higher time frame and initially just outlined all the highs that price could possibly take up. And as you can see on a lower time frame, there were two higher highs that we could have used as our target profit. So initially, if you're trading there and you were to put your TP there, that would have been a 2.7, if not basically a 3 to 1 risk to reward. If not, it's the opposite way, 1 to 3, a 1 to 3 risk to reward, yes. And then if you also did use the other high that was presented, that could have also been a more profitable position, giving you a 5 to 1 risk to reward ratio, even also being hit before the close of not even before the close, before the end of the New York Open kill zone. So initially I used CRT, identified the highs from 7 a.m. and initially just used that on a lower time frame, found some respect, placed an entry, and I targeted previous highs. And from there, if you did target the highest previous high, if not, that wasn't really the highest previous high, but if you did target the highs, you would have gotten anything from around 3 to 5 in terms of a risk to reward ratio. Anyways, that's it from my side. Governor Gus, hope you guys found the video informative.
What you know about chilling in the back of the truck? Some money in the back of the bug. I'm hustling in the back of the bug. Shooting that shit in the back of the bug. In the back of the bucky. These niggas is hosting a party with all of these homies. It's getting too rowdy.
I could never crash out. I could never crash out over no bitch. Fuck is you talking about?